Hmm. Can you spell Jerome Powell? What happened this week? Jerome Powell, uh, President Trump's favorite Fed chief, and the Federal Reserve kept the interest rates unchanged. I expected that. Although before the open today, half hour before the open, one of the Fed members said, we may cut rates as early as July, and the futures were negative. They went green. Now they're going back to negative. But today's movement is going to be exaggerated by quadruple witching. OPEX, obviously. Like I said, 8 out of the last 10 times we had downward pressure. Who knows what's going to happen, but all that will figure itself out by Monday. That's why I don't watch too closely. Unless you're a market maker or a dealer, then you need to do a whole bunch of things. Like last half hour, you have to swing like hundreds of millions of shares of stock, of options or whatever. We're none of that. We're just kind of bystanders on this. But so the Fed kept the rates unchanged. I have put videos on this. I expected the Fed not to cut rates. I don't think Fed should cut rates. The only reason we want lower rates is because who needs lower rates in this country? Obviously, we do as a consumer, right? We want lower mortgage rates. We want lower car loans. We want credit card rates to go lower. We want lower rates. It's all tied into the 10-year and 20-year treasury, okay? But who wants or who needs the lower interest rates the most in this country? The U.S. government does. Why? Because we have 37 trillion, to be about 38 in another 50 days, trillion with a T, national debt. It's going up 100, every 100 days, it's going up $1 trillion. Think about it, okay? So these are IOUs. These are IOUs we just spread all over the world, including the U.S. pension plans and, all endowments and all kinds of things. Okay. Well, when you do have a loan, right, when you have an IOU, you have to pay people interest, simply put. Well, that's the servicing cost. On $37 trillion, most of these bonds have been issued 5, 6, 8, 10 years ago, right? Okay, during ZIRP, which was the cause of 2008 GFC, the Great Financial Crisis, and then it got exacerbated by COVID. So we've had 15 years of ZIRP. How did that work out? He brought inflation like nobody's business. We know what happens. Everything we buy last 4 years is double, triple, right? The government says, oh, inflation is 2% and everything is good. I'm like, what are you guys talking about, man? Stop gaslighting the U.S. people. Stop gaslighting the U.S. public. Inflation is not 2%. How much more rent are you paying the last 4 years? How much more car insurance you're paying for your car insurance last 4 years? How about food? How much? How is it 2%? It's not. Stop gaslighting. Actually, I have a video coming out at noon today that calls them all out. But besides that, Fed said, well, we have to watch. We have our mandate, 2% inflation, full employment, and a good GDP growth. Okay, we have all that. Inflation is coming down to about 2.4 now from 5, 6, 7. I still don't believe it's 2.4. I think it's double. It's probably 5 or 6 per year. You can tell that, by the way, how much your $100 is buying. Okay, how much buying power has your $100 lost last 5 years? About 6 or 7% a year. Okay, so Fed said no rate cut, and Trump came out. He went to town on Jerome Powell. I'm reading. This is exactly what he said. President Trump said, too late, Jerome Powell is costing our country hundreds of billions of dollars, right? He's truly one of the dumbest and most destructive people in government. By the way, President Trump in his first term appointed Jerome Powell to the Fed chair, so you guys know. And Biden gave him the second term. We obviously know he's not going to be around once his term is up in 2026, if not before. But he can't fire him, so this is what he does. And the Fed board is complicit. Europe has had 10 cuts. Why? Why do you cut interest rates? Because your economy is going into the shithole. You cut interest rates when your economy either is slowing or you're going into a recession. You don't cut rates when everything's going fine, and Fed says everything's going fine. They're also worried about the lag effect of tariffs kicking in. How's that going, by the way? How's that tariff thing going? You guys remember the taco trade on that one? I mean, I'm not a huge fan of the taco trade, but it seems like it's working. You guys know what that is, right? I'm not going to say any more about the taco trade. But so Liberation Day was April 2nd. And when the market just absolutely took a dive to 4,800 on SPX, what did the administration do? Oh, we delay for 90 days. People, it's coming up. It's July 7th. Who has been at the table? How many deals did we sign about these tariffs? Are we going to kick the can down the road again? I mean, there's some volatility showing up here shortly. But so, Fed goes, tariffs didn't go anywhere. We didn't sign any deals. Tariffs didn't go back to what they were. And I do believe, I agree with the administration. I think our trade is completely unfair. But then these tariffs may hurt the American consumer by increased prices. And the Fed is going, we can't cut rates now because we don't know what the effect of the tariffs are going to be. If the tariffs are staying, it's going to be inflationary. And we cut rates, we're going to fuel inflation again. We're just trying to kill inflation. We can't do that. That's what they said. We're not going to cut rates. Okay, cool. I'm just trying to make it as simple as I can. So then President Trump said, Fed board is complicit. Europe has had 10 cuts. We have had none. We should be 2.5 points lower. No. And save billions on all Biden's short-term debt. Now, this one we can talk about. We have low inflation, too late, that's Powell's nickname for Trump, is an American disgrace. And then during the Q&A on Wednesday, Chair Powell, Fed Chair Powell said, we will likely get to a place where rate cuts are appropriate. Okay. Fed will make smarter decisions if they wait a couple of months. Okay. Fed expects meaningful amount of inflation in coming months. Hello, because tariffs have a lag effect. Unemployment remains in a reasonable place. This is what they said. It will take time to see how large inflation effects will be. And Fed's inflation forecast for this year is higher due to tariffs. Okay, so, and economy is 3.8 GDP. Why do we have to cut rates? We're doing fine. That's what the Fed said. President Trump says, no, you losers. We need to cut rates 100 basis points. President Trump, if we cut rates 100 basis points, inflation is going to soar. Like, soar. But why do we need 100 basis point cut in the interest rates? That 100 basis point cut that President Trump is asking for is going to save us $350 billion in U.S. Treasury servicing cost. That's why we need, see, that's what I said at the start. The U.S. government needs lower interest rates more than the consumer, because consumers hanging in there. Although they're spending on crack plastic, they're hanging in there so far, right? Okay. And but U.S. government needs lower interest rates the most, because we have about 8 or 9 trillion with a T dollars worth of notes, bonds coming due. This is just the treasuries. There's a whole bunch of corporates that are coming due as well. Coming due, maturing. All the bonds, notes we issued right during GFC and COVID, they're all maturing now. Well, we can't just say, we're not going to pay for those. We're just going to let it mature. No, they need to get replaced, right? Okay, so when we're replacing those, the new interest rate that we have to put on it has to be higher, because the buyer of those notes demands higher returns for the risk that they're taking. Okay, well, when we do that, so last year, the 37 trillion's interest cost or interest servicing cost was $1.2 trillion. Trillion, just interest, putting 1.2 trillion on fire. Can't we use that 1.2 trillion to do good stuff in the country? We certainly could. However, we're out of control. Washington is useless. They haven't seen a dollar they don't like. What do? So now we're going to have to issue these bonds at 4 or 5%. Well, that's about 150 basis points higher than the ones we're replacing. So now our interest cost, servicing cost in 2025 on our national debt is going to be $1.5 trillion. Just the interest cost. while the debt is going up 100 trillion every 100 days is going up a trillion. We can't play this game. We can't continue this way. And Elon Musk was right. He went in, tried to clean it up. He got frustrated and he quit because Tesla was going into the tank. And, but that's not the point. The point is we can't keep doing this. We can't. We need to get all these people out of Washington. We need to put some people who can do math. Why am I mortgaging my kid's future, man? Right? I'm okay. But why? Why mortgage the American people's future? It's just bullshit. But they do it, and nobody stops them. Okay, well, Elon tried. Didn't work out. He had a little breakup with his BFF. It seems like their things are fine now, but that's the problem. That's what we have. We're going to replace these notes, bonds that are coming, maturing next 6 months. And when we do, we're going to pay higher interest rates. $1.5 trillion, by the way, is 2 times the size of our defense budget. It's almost 50% more than all of our Social Security spending. And we're putting that on fire. That's it. No good.